Guys, welcome back. Johnny here. And tonight I want to do another subscriber stock pick, Axon or AAXN. Now this is an aerospace and defense technology sector stock, but these ones more specifically develop wearable cameras and software technology, stuff like that. So we're going to go over this company here today. Axon. Right now you could buy it for $66.88. It has 164% growth in 1 year, and it has 200% growth in 5 years. Now this looks to me from the research I've done a strong buy. That's what's going to be in the title. Its volatility is medium, but it doesn't really have too much volatility. It looks like it's had a steady increase going up. Now their collection is, of course, manufacturing, defense technology, air transportation, and technology, stuff like that. Now, 54% of the 13 analysts rating are saying it's a buy, 46% are saying to hold, and no one is saying to sell. Now, their market cap is large at 3.68 billion, as well as a high PE ratio. Now, their PE ratio is extremely high, but their earnings per share is very, very low. So that could be hopefully a turn for the better, showing that they are a more under. Basically, they're an overvalued company right now, but hopefully that would change as time goes on. Now, their expected earnings per share is 4 cents. We will know more by tomorrow, it looks like, after hours. Last quarter, they did exceed it. It looks like at 32 cents per share. Now, this company has been around since 1993, and they have 950 employees. Now, let's just go over Axon real quick as a company itself. I did find an article on Robinhood. Now, Axon Enterprise Inc. Has a positive earnings of 700%, and basically that beat estimates twice with an average positive surprise of 330%. So hopefully we'll see the same thing this earnings call tomorrow. Now, some factors under consideration. Axon Enterprises is a renowned supplier of body-worn video cameras and smart weapons in the security and public safety space. The Montgomery County Police Department has ordered 1,800 cameras for its agency patrol vehicles in the second quarter, as well as UK's Kent Police Force ordering 4,700 body-worn cameras. They have a lot of orders to fulfill. Now, they also have taser weaponry that are strong, sustained demand for both its U.S.-based and international clients, and that has grown 7 to 10% in the second quarter. Now, with that said, they have a 20% year-over-year improvement, which is great. And on the flip side, the company expects an increase in operational expenses in the second quarter, driven by investments in the new product pipeline, operating expenses, and such. Now, I believe this is a really good company to get involved in. It doesn't really have a high earnings per share at the moment. It's actually really low. But if it can get to at least 30 cents or so, even 20 cents, really anything positive would be good for this company. Also, the street has rated it a buy as well. It's a B minus, but it is still a buy. They don't have a dividend at the moment, but as you can see, the price change is at 66% in 3 months and 180% in 1 year. Their revenue is extremely high, as well as their net income. Their earnings per share also is very high. Overall, their 12 months, it was a negative. Now, they were in a hold rating for quite some time. It looks like it switched over to a buy rating with a target price of $91.59. Now, this is a great price target for what we would buy now. So it's expected to do very well for itself in the future. Some of its notable strengths and are that it has increased its revenue growth by 27% since last year, which has helped, of course, boost the earnings per share. Also, the gross profit margin is high at 66%. That has also increased with its net profit margin of 12.77%. Now, that's above the industry's average. Also, their net operating cash flow increased by 373% to $18 million. Now, that is amazing. That's just amazing growth. That's a huge. So, their net income has also exceeded the S&P 500. In the aerospace and defense industry, their net income increased by 182% from last year, rising from $4.58 million to $13 million. Now, this is a strong company to get involved in. Its earnings growth was 166%, stock surging 180% year over year. Now, everyone knows aerospace and defense industries help us with defense, space, homeland security, and information technologies. This is a large, basically, sector or industry in the stock market. I don't believe this is going to be going anywhere anytime soon. As you can see, their net income is very high and their net sales. Their PE ratio is very high right now, but that's okay. That's not always a huge factor when trying to pick a stock. As you can see, their factor for growth, 3 out of 5 stars. Total return, 5 out of 5 stars. Efficiency, 4 out of 5 stars. Price volatility, 3.5 out of 5 stars. Solvency, 3 out of 5 stars. And income, 0.5 out of 5 stars. So I definitely would say that Axon Enterprise is a buy. And so, yeah, that would be a strong buy, guys. I could see this company really not doing bad over the next couple of years. They have a lot of new technology coming out and a lot of orders to fulfill in this next quarter, just for this quarter period, and a lot more to come in the future. So if you guys like this video, smash the like button and share it with someone you think might like it. Also, subscribe to my channel if you haven't already, and smash that little bell so you don't miss anything. Alright guys, you have a good night.